There's still a 50% decline
4%.
that they've reacted.
I think it could be because of asset quality.
It could most likely be because of asset quality for Punjab National Bank. The gross NPAs will be the key thing to watch out for. Also, whether they've made a profit in terms of the operating level. I've got the P&L with me, so I'll just read out a couple of factors for them. In terms of the gross NPLs, that should come up for you. It's coming at 6.47%. So that's an improvement on a sequential basis versus 6.5% last quarter. So 6.47% compares to 6.55%. Net NPL is flat and stagnant sequentially. So that's another thumbs up, which is coming for PNB. 4.05, which compares to 4.06% Q-on-Q. The gross NPAs in terms of an absolute basis also have reduced. So 25,397 crores, which compares to 25,694 crores. It's best to say that it's absolutely flat Q-on-Q in terms of the gross NPAs. Similar case for the net NPAs. So what has really surprised the street and taken it in terms of a positive this time for PNB is the gross NPAs plus the net NPAs. The lower profit is because of the provisions which have come in at over 1,800 crores this quarter. 1,811.4 crores is where it's coming at, but it's significantly lower Q-on-Q, and that's another positive which has come in for PNB. So overall, I would think it's a good set of numbers which have come in. They've recorded an operating profit this time. The PBT also should possibly be a gain that they've recorded as opposed to a loss in the previous quarter, which the street was worried about. So 1320.7, which is coming on the PBT as well for PNB. We have Rajiv Mehta of IIFL joining in, and we have Lata joining in the studio for the PNB numbers as well. Rajiv, your first take on PNB, sequential recovery.
Seems like I think the headline numbers are below our expectations, and of course they are also below the previous quarter's level at 6.5% of the gross NPA. But I think there is net NPA levels are stable on sequential basis. So probably there could be an element of some write-off or a sale of asset which we need to more read into once the information is out.
Okay.
Yeah, actually, we have to take that point on board. If you remember, we did see lower or stable NPLs for Axis Bank as well. It was 3.4% quarter-on-quarter rise in gross NPLs. But when the actual numbers came in, the slippages were higher. So we have to worry about that.
Also 100 crore below estimate, Lata.
So that's not a gain of 6.3%. That's okay because last
that's only 2% less than what the street expected. So we could work with that. But on NPLs, I would really take Rajiv's point that all we know is that the gross NPLs are lower. This could be for a whole host of reasons, write-offs, recoveries. We have to really exactly. We have to really wait for the entire picture, and that will depend on what the slippages number they post. All you can say is at the moment these are very good set of numbers. These are a relief. I mean 6.4 is never a good NPL number to work with, but the fact that it has not gotten worse than 6.55 is positive. If this is a directional change, then this is certainly good for the stock.
And the other thing is that the provisions have declined sequentially, Lata. It's important because last quarter it had risen 79% year-on-year. It had risen 161% sequentially. And this time it's a 53% fall Q-on-Q. So when I was making these consensus estimates, one of the key things that analysts were talking about was the provision outlook on a sequential basis for PNB, and that has come down 53% Q-on-Q. So
but
that's
the
a positive
percentage is 59.32. The previous provision coverage ratio was, would you have that?
58.21, so that's increased.
58.21, so actually it's increased. So that means not that you're providing less. See, provisions is a little difficult to judge. When a loan immediately goes bad, in the first year when you have high slippages, you provide only for 15%. Second year you provide for 25%, third year 40%, and the 100% is in the fourth year. Now that is the minimum the RBI requires. If you have more money and more profits, you can provide 60% in the first year. So it's very difficult at what point in time you are going to provide how much. Just because you provided less in a particular quarter couldn't mean that you are becoming a reckless bank at all. It's because you over-provided in previous years. So I think we should worry less about the provision number on a quarter-on-quarter basis. The provision coverage ratio has, if anything, increased. So one wouldn't worry too much. Now I think the next number we really have to wait for is the slippages number and the recoveries, how much of NPLs, restructured assets slipped into NPLs. Otherwise, on the face of it, prima facie, you will have to give it to the bank that it looks like an improved set of numbers. Good.
Exactly. It's a relief that there is no loss, there is no untoward spike up in terms of the gross NPL. So it's a relief from what they reported last quarter. Kajal, Gandhi of ICICI Direct joins in as well. Kajal, your take on the PNB numbers?
Broadly, they're looking better than estimates because NPAs have not increased. Only on the profit front, it is marginally lower. It's fine because profits are not anyways consistent now for these banks. So asset quality and NII being maintained remain a positive.
Okay. What is your rating on the bank itself at this point in time? You think it has value, Kajal?
Yeah, we have a buy rating on the stock, mainly because at these valuations you'll have some more NPAs, but then there will not be too much to lose basically on the price side.
Okay. Rajiv, come in terms of what you expect from the management. I know it's tough to say, but you're expecting lesser slippages based on what you've seen and based on what you've heard from the management through the quarter?
No, I think the risk of slippages coming through in the next, at least next couple of quarters still remain high. We don't have the absolute slippage number for the first quarter, but I think that risk still stays because they've got huge amount of restructured asset book, and even in the last quarter, if I remember it correctly, 2,500 to 3,000 odd crores of restructured assets slipped. So I think this risk of accounts slipping from restructured assets to the NPLs still remain high, given the fact that the economy has not recovered to the extent what one had expected.
Okay. Rajiv, a lot of Discom loans are a problem for Punjab National Bank. Now, they obviously still run as standard, not even as impaired or stressed loans. What is your idea of how would you calculate the book value at this point in time? What's the FY16 book value and therefore book price to book for Punjab National Bank?
So, based on the pre-result estimates, I think we had an estimate of adjusted book value of about 150 odd. And we remain focused on risk at this point in time, then more on returns, because we think that PSU banks are still facing a very challenging environment, which will not immediately improve. To give you a context, if you look at PNB, if you look at the unprovided NPLs, and if you look at the restructured assets on which you've just provided 5% that combined is about 140% of the net worth. So a lot of PSU banks are running or having that kind of a risk.
A minute, I've got an SMS now. I'm not wanting to vouch for it, but this says that the fresh slippages are 2802 crores. If that is the case, this is a superb set of numbers.
Yeah.
This has come from a very senior person in the bank. But if it is 2802, the slippages, then this is really a good set of numbers. The restructured assets are 676 crores. That doesn't surprise me.
Yeah.
So 676 crores because restructuring now is not really to the advantage of any bank. And so anyway, the CDR cell has very few companies in the pipeline asking for restructured. That was always expected to be lower. So fresh restructuring coming in at 676 crores compared to that 7,800 in the fourth quarter. And slippages coming in at 2806 crores. So it does look like
excellent.
Yeah, it does look like a very good set of numbers from PNB, and now the stock is up 6%. Rajiv, any thoughts?
No, I think this is a big positive then, because so far I was thinking that probably the slippages in this quarter could be huge, given the trend that what we had seen in the last 2 years on quarterly basis. So we were actually working with a slippage number of close to 5,000 crore. So if the number what you have said is correct, that's significantly lower. And it's very difficult to again foretell whether this number will be sustainable or not, but at least for this quarter it's a big positive surprise for the stock.
Rajiv, the stock is trading at around 0.7, 0.8 times FI17 and FI17. Do you think that eventually the stock can rise to maybe 1 times price to book value? Or versus its historical trend? Actually, how much confidence do you have?
Actually, if you can once again repeat your book value, I missed that, Rajiv.
Yeah, so my current estimate is about 151 for the adjusted book value for FY17. So it is trading at sub book value. You're correct about that.
Yeah.
But our view, it's very difficult to change a long-held view on PSU banks unless you see a spate of, strong performance or a sustained strong outperformance by these banks.
So that's
one quarter.
That's
so one
what
quarter
my
will not
next
change.
question actually was. Are you going to change your estimates just based on this quarter's numbers, or are you going to wait for a couple of more quarters to check sustainability?
See, there is no beat in terms of PAT. So I'm not so sure whether I'll change my earnings estimate so much. It also a lot depends on the management commentary which will follow soon. So it's very difficult to tell what kind of revision will come in my earnings or my estimates. But at least I can say safely about my view that possibly my view will not change just by one quarter of good performance.
Okay, and Kajal, your quick take on the PNB numbers. Will you be changing any estimates, your call on the stock and how you've read the numbers in totality?
Broadly, if the slippages are at 2,800 crore, we will not be changing too much. We were working on 3,000, 4,000 crore estimate for the GNPA addition. So this is broadly in line what we were thinking, and we do have a buy already on the stock. Because there are selective PSU banks only where you can work with. There are not too many options left because mid-sized PSU banks anyways aren't doing that at all great. So we'll continue with the positive view on a couple of PSU banks.
Okay. Well, actually, during the fourth quarter, the bank did say very clearly they don't expect next year's slippages to be very high. So this 2802 is something I would go by, but I would still want the management to come on the channel and once again reiterate that number. This comes from absolutely the topmost source, but it is on SMS, so I would really want, these are single word numbers that are SMS'd. I would hold back and still think that this is a good set of numbers. Punjab National Bank running away with a 6% gain.
And Union Bank also following suit ahead of numbers, so that optimism has rubbed off, up around 3.5%. Kajal as well as Rajiv, thank you very much for joining in and taking us through the PNB numbers. And you can see how good the numbers have been taken by the market. The stock is the top gain on the Nifty, up around 6%. But that's all the time.